Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. In today's action, we saw the SPY and the QQQs pushing in another green day. The Qs, as a matter of fact, hitting a brand new all-time high on the session, and that was largely due to NVIDIA's performance, NVIDIA hitting its own new all-time high as well. However, depending on what you were invested today, your portfolio may or may not have been green. That is simply because the market was carried up today by a few key names. The market breadth was kind of a little bit of a weak point in the markets, as we did see some rotation to the downside across a lot of major sectors, but we did have some key names that were pushing higher. So it's our job as traders to find those names that are in the most favorable conditions of them all and trade them accordingly. So in today's video, guys, we're going to keep it quite simple. Today, there was no major news to speak of, no tariff updates, no geopolitical updates, no home politics to be announced as of right now. The next piece of news in terms of macro data will come on the Friday session, during which we will get the PCE inflation read, which is the Fed's preferred measure of inflation. Supposedly, it will have an uptick in relation to last month's period, but not a significant uptick to say the least. So that will be the next macro update. As a result, we'll keep it very simple. Number one, we're going to go through one key company earnings that have earnings after the bell today, which was Micron. Micron absolutely smashing it on earnings today. However, the stock price didn't move quite as much as you would have expected with such fantastic numbers. Another case in point of when a stock runs a tremendous amount into earnings, even a fantastic beat sometimes is not enough to make that rally persist. After we cover the Micron earnings, we'll get into our major technical analysis rundown of our major market indexes. Check on that rotation, because today was definitely a day where the Qs and the SMH pulled ahead of everybody else, but a lot of other major sectors are left behind, which could lead us into some decent trade opportunities for quite a number of names out there in the market that have been left behind. Thereafter, we'll do the same thing on our big tech name list right here, as several were in the green, but we did have a few components in the red, so we will determine whether or not there's some nice swing trades or some portfolio additions across all our big tech names there. And lastly, as I've been doing a new segment, we will wrap it up with the biggest gainers and losers of the day, where I will try to go through as many stocks as humanly possible and try to give my perspective on whether or not there's some swing trades or maybe long-term portfolio positions to be had there as well. So without further ado, guys, should be a fairly shorter video than usual. Let's jump right into it, shall we? So the SPY up 0.06, the QQQ's up 0.26, but when you take a look at the heat map, guys, you might have expected it to be a red day in the markets. Many more names were declining than advancing, and several of these names down 2%. However, the big tech category was enough to keep everything in the green, and that is in spite of it doing it without performance from Amazon, Tesla, nor Meta. Google with a very nice day, NVIDIA fracturing new all-time highs, and Microsoft and Apple carrying their weight as well. The financial sector was mixed. You could say the same thing about healthcare, and the bottom half of the market, even though yields did not move too much, and several of these are rate-sensitive sectors, still down and to the right, essentially, for a lot of those sectors. But there could be some interesting plays here in our consumer defensive category, which has really been lagging behind the market now for a considerable amount of time. You can see that even better on the one-day relative performance here, where only tech and communication services made it into the green. To the downside, pretty much everything else, the worst performer of which was real estate. Where do we stand on the one-week relative performance as the SPY continues to march on to its own respective all-time highs? Well, as a matter of fact, more sectors were in the green than in the red. So despite today's lack of breadth, we can say as a summary that in the last week, the markets have overall been quite decent. However, just not today. So in terms of, before we get into more technical analysis, guys, let us dive directly into those Micron earnings. We're going to spend about 7-8 minutes on them, and I'll give you my thoughts. After Micron has had such a significant rally here from the bottom to the top, you're talking almost a 2x since the month of April. And we've done quite well in that position. As I announced my position almost near the lows back there, we took some call debit spreads, leap call debit spreads. Those right now are up 152%. So congratulations if you guys were able to benefit from that Micron trade call out back in the day. However, right now, is it a good time to be possibly buying this one, or are you possibly a bit too late? Well, let's take a look at the numbers here, shall we? The earnings absolutely smashed it. 19% beat. That's a very wide margin beat on the consensus EPS, and a 5% beat on revenue, which is also a fairly significant beat in terms of revenue overall. We know that Micron in the most recent history has struggled, right? For the past roughly year and a bit, Micron had been coming down since reaching the peaks in June of 2024 all the way down. This stock from the top to the bottom had lost almost 60%, and that was for a few key reasons. I'll remind you, the stock right now in the after hours is only up 0.2% after those earnings. Look, we had a 6% pop and they gave it all back. Of course, the after hours move is not the end all be all. We will see how traders, retail, and institutions are positioning into this one tomorrow, but suffice to say, the numbers were absolutely fantastic. Before we get into the actual earnings for this quarter, I want to remind you what was the problems affecting Micron from here down to there, and have those problems been solved? Well, back in 2023 and into early 2024, there was a PC and smartphone slowdown. China firms were also banned from buying, and they were doing huge amounts of capital expenditures for new factories. As a result, margins came down, free cash flow came down as well, and the company really went through its cyclicality. Yeah, we know that semiconductors are a very cyclical industry to begin with, and you can see that from the EPS right here. Very good expansion into late 2022, but 23 and 2024 were transition years for the company. Now, the coast seems pretty clear from now through 2028 to once again reach the expansionary phase, and that is exactly what I was looking for on Micron before positioning in the stock myself. We've been commenting on this for the past 2 quarters, trying to find the inflection point, and I can report now that the inflection point has indeed been found, and we are into Micron's new expansionary phase, both measured by EPS, measured by revenue as well, but also by margin expansion. Take a look at the margins right here in terms of the evolution over the last roughly 7-8 quarters. You can see a clear difference right now in the margins that they used to have. Gross margins were actually negative just 7 quarters ago before moving into the teens, the 20s, and now where they actually belong when the company is in an expansionary phase, the high 30s, and in the next quarter, guiding for the lower 40% range. Net margins have also went from negative all the way back to positive territory, and now I'm happy to report that this most recent quarter, they reported net margins of 23.6%, the best in 2 years. So the company is definitely moving on towards the target of being in its expansionary phase. Before we get into the actual earnings slides, let's take a quick glance at the earnings numbers at a quick preview, right? Revenue was up 37% year over year, absolutely smashing it. Their data center revenue as well segment was up to 5.07 billion, 97% year over year, guys. Almost a double. That is fantastic. Micron really coming into that expansionary phase because of AI and data center applications. You can see a very quick and sharp recovery of operating margins here from negative all the way to positive now. And we also have a very decent move here on operating income, and EPS was an absolute smash for Micron overall. Now, a few key numbers here. Micron reports earnings, revenue beats, and issues strong forecast. This was the highlight, guys. The guidance. Not only did they crush it on this quarter, but the guidance for next quarter was equally as good. Next quarter, they will be looking for 10.7 billion in revenue. The consensus was 9.9. It's not very often that you see a company beat estimates by 10%. That was a very wide margin on revenue. Now, EPS, the consensus was 2.03, and we now have guidance for $2.50 plus or minus 15 cents. For all intents and purposes, you can say that they crushed their EPS guidance as well by 20%. So 10% beat on revenue guidance, 20% beat on EPS guidance. That is very, very strong. However, the stock did not move much in after hours. Even that was not enough. But I'll remind you, just in the last 2 weeks as well, guys, Micron has been up an absolute fantastic amount, 17%. So perhaps a lot of that move was already baked in, one could argue. Data center revenue more than doubled, as we saw this chart right here. Well, not more than, almost doubled. The company has seen soaring demand in the high bandwidth memory or HBM market due to the AI boom. Very obvious. The CEO had to say that they were doing disciplined investments to build on our technology leadership and manufacturing excellence to satisfy the growing AI-driven memory demand. Good thing for Micron, though, a lot of those investments were made late 2023 and 2024, and now the amount of capex that they're doing is going down. They're still doing some, but not as much, which means they've also recaptured a positive free cash flow metric, which they have not had now, guys, for several quarters. Everything's looking good. Revenue moving higher, a lot higher. EPS moving higher. Free cash flow now back to positive and expanding gross operating and net margins. That is exactly what you want to see when one of these semiconductor companies is coming into its expansionary stride. Let's move into some of the earnings slides for a few updates from the company. They say they are making excellent progress on their new DRAM technology called 1 Gamma, as opposed to the previous 1 Beta iteration DRAM. It has 30% improvement in bit density, more than 20% lower power, and up to 15% higher performance. So Micron definitely hitting it out of the park with those metrics right there. As in terms of their market share, I'll remind you, they compete with several other people in many different metrics. In terms of the types of products that they deliver, they compete against SK Hynix, but they also do compete against Samsung. So what is Micron's total market share right now across HBM and DRAM? Well, it's going to be roughly 20 to 25% of the whole market share, and that is going to be equivalent across HBM and DRAM as well, per the company's guidance. They also have a partnership to supply high bandwidth memory to AMD's iteration of data center GPUs, the new MI355X GPU platform. Moving on further, in terms of the PC market, we understood that the last 2 years have been weak, but what is the outlook for the company? Is the PC market also starting to curl over? Well, here as it is. We expect the PC market units to grow in the low single-digit percentage range in calendar 2025, so not quite there yet. That has to do with the consumer cycle, and as we've been covering many times on the channel over the past 3, 6, 9 months, that consumer cycle of spending is not quite here yet. People are spending on experiences, but not spending so much on technology upgrades just yet. However, Micron does expect this to be helped by AI, the ramp of AI-enabled PCs, and the Windows 11 upgrade cycle too, which should be coming midway and to the tail end of this year. In terms of mobile, we know that that's been weak as well. You only have to look so far as Apple's earnings to understand that. They expect smartphone units to grow also low single digits in calendar 2025, but at least PC and mobile are no longer declining. They're now slowly on the ramp up. So 2026, I believe, should be a fantastic year for Micron, where a lot of these metrics will be a lot higher than they have been in the past couple of years. And mobile, I'll remind you, they're looking for, smartphone applications, of course, with new AI-enabled features, which will seek to have memory features of 12 gigabytes or more compared to the 8 gigabytes of capacity in the average smartphone today. All things that do advantage Micron. And lastly, another segment here, automotive and embedded. They expect increasing adoption, of course, of the, smart cars, essentially using more and more sensors, more and more technology features, and more AI-enabled driver assistance programs, which also will require higher bandwidth requirements, of which Micron is happy to supply. In terms of the firm's market outlook, our customers continue to signal a constructive demand environment for the remainder of this calendar year. Once again, very bullish guidance. Demand remains strong. Over the medium term, we anticipate industry bit demand growth of mid-teens compound annual growth rate for both DRAM and NAND. So fantastic outlooks on all fronts, whether commercial, industrial, or now potentially even consumer segments of Micron's markets. Taking a brief look at some of the numbers right here that I felt were most noteworthy in terms of the DRAM segment, revenue increasing 51% year over year, and that is 76% of the revenue, guys. So it definitely does matter a lot. In terms of their gross margins, you can see an uptick here to 39%. Their guidance is for 42% next quarter, so increasing again. And net income, finally ramping up that net income. A few last numbers for you guys. Adjusted free cash flow was $1.9 billion. Last quarter, this was actually negative. A lot of quarters in the past 2 years for Micron have either been flat or negative free cash flow. So nice to see them add a nice chunk of $2 billion at this current time, as the CapEx still does remain, but will be on a declining metric overall, as they spent most of the money to build all of their factories, and all their factories are currently under construction. They have 3 very large factories under construction right now, most of which will be up and running by either 2026 or the major one in Idaho in mid-2027. Here's your guidance, 42% gross margins for the next quarter. And we already went over, of course, the revenue and EPS guidance as well. Fantastic quarter, both for this quarter and for next quarter guidance as well. Now, of course, the question that everybody must be asking, what about the price? Well, of course, we went over the expansion phase that Micron is in right now. You can clearly see that from the EPS. You can clearly see that from the revenue, from the margin expansion, and from the recapture of free cash flow. However, at $125, now we are closer to the all-time highs. We're only off by about 18%. Is it too late to buy Micron? Well, maybe not. Take a look at the revenue numbers and EPS growth factors right here. Revenue growth and EPS growth through 2028 are fantastic. Revenue growth in the mid-teens and EPS growth 26.8% average for the next 4 years. That is fantastic, which means that at 125 right now, they're trading at a very low 16 forward price to earnings for the end of the year. And if you were to take EPS for 2026, which is like $11, they're trading at like a 12.13. The company is still objectively cheap, especially when compared to a lot of its sector peers. Taking a look at the PEG ratio at 125, it is still only 0.6. That is ridiculous, guys. By no means is this company expensive in terms of earnings growth metrics, and price to sales is only a 4. The industry overall, most semiconductors trade between 10 and 20. So across all valuation metrics, you can make the argument that Micron is still cheap and could be warranting a buy for possible future upside expansion. Of course, you're not as early as potentially some of the viewers on the channel and myself were, but you are still objectively not getting a bad deal if this is the first time that you're taking a look at the stock. So do with that what you will. One thing is for sure, in the event that we somehow pull back into support down here in the 111, 115 range, it might just be a very decent opportunity for both some longs for long-term swing trades with shares, but also maybe some short-term expansion if options are your thing. I definitely will be revisiting increasing a position on Micron if ever we do pull back to there. But if I'm just looking for the long term, maybe a little nibble here and then possibly DCA into the area if we drop could also be a quite valid point. That's everything that I had for you guys for Micron earnings. Hopefully you enjoyed that. Now let's jump into the indexes, shall we? So the indexes, we are going to keep this very quick and brief because not much has changed. The SPY is still looking good despite not cracking above the all-time highs just yet. Still dealing with that overhead resistance. 609, 6010, let's call it, all the way down to about 598 is the 10-point resistance range. The bulls are looking good. Daily downtrend into a nice engulfing move gives them a lot of space for a pullback. Anything above 591 looking for a higher low, possibly for some further expansion. What you would like to see is the good old breakout, retest, and possibly run. Why? Because if you break out, you get the retest, you can set a stop loss down below there, and then you have a very good probability of it being a breakout of the range. Rather than just taking the breakout trade here and crossing your fingers, you wait for the bulls to actually breach the level. Now, in the event that we don't do that and XYZ happens in the market and we reject and go into a daily downtrend cycle, I will remind you who is in control of the longer term charts because it matters. It is definitely the weekly bulls right now looking very strong. Higher lows are set, looking for that weekly expansionary phase looking quite good. The markets are still feeling a little bit greedy overall. July typically as well is a very bullish period of time for the markets. This is data over the last 20 years on average. July tends to be one of the better months of the year. And I showed this chart yesterday. As of last Friday, we did see a net increase in institutional buying coming off some of the lows as retail kind of dumped their shares into him during the conflicts. Now we might have a bit more room for retail to increase their buys if they feel a bit of FOMO, and institutions have been on the buying spree already. So we do have some price support from possibly two parties, which could lead us into the all-time highs sometime soon. Moving on to the QQQs right now, looking at for a 0.26% gain on the day. Brand new all-time highs on the Qs. The chart looks absolutely fantastic in my humble opinion. The daily uptrend was right here. We almost lost it. Equal lows were in place, and the bulls just simply continuing on. Brand new leg of the daily uptrend right now. In the event we get a pullback, you guys know the drill. Good old breakout, retest, and possibly run is on the table. One of my favorite trade setups. Any retest down here of the 12 EMA around 531 could allow for a gap fill number one, but also for a stop loss below the low and try to go for the expansion swing trade. Not looking too bad there at all. And the weekly bulls have absolute tons of space between them and the most recent lows as well. So we are looking quite good for an expansionary phase in the markets, and we don't have that much time before the monthly candle close. Suffice to say, if the monthly candle close happens to be something like this, this is looking like a very nice trend continuation candle overall, and we could just be looking to make our way into the 550, 560 range over the course of the month of July, provided that we don't get hit with some crazy news in the interim, right? Moving on to financials right now. So financials, a little bit of a consolidation day. You can see that the sector was mixed, right? Credit cards came down, the banks were up, some of the insurance plays were down overall, but all things considered, financials did not lose much territory. That being said, we are still roughly in the confines of resistance, 51.50 down to 50.8, and the bulls do have a lot of space, right? Daily uptrend is nice. looking for a higher low. At this point, anything above 49.83, higher low, bit of a gap to be filled here, and then you might just get the pop and break higher. We have a lot of names that have been lagging. The weekly charts look very good. This is pretty much a bull flag, and you do have a bullish leaning bias just because the bulls control the time frame right now. It is a consolidation at the top end of a very nice move right now. And if the SPY and QQQ continue to remain bullish, the XLF may not remain muted for much longer. I'll remind you, the banks have been doing good, but some of the names that I like the most for buys are probably Visa, MasterCard right now, and also Berkshire. Berkshire has really been lagging hard. I could see myself possibly take a swing trade opportunity on Berkshire, anywhere between 485 down to about 470, this sweet spot range into the 200-day EMA, which is also a lot of support. So I'm not playing the banks, but other financial names might be worth a second look. Moving on to healthcare right now, healthcare actually ending green on the day as the bulls look to try and get back as much of this move as possible. We know what the structure was. It was a nice daily uptrend. However, we lost it. We lost the daily higher lows right there. So the bears want something like this to happen, but it may not be that simple. Why? Well, because the bulls put a huge move on the weekly, right? Take a look at this. Very nice 75% bounce. When you get a 70+% bounce, it gives the bulls real good odds of being able to set a higher low and then move higher. Quite simply, why? Well, because when you engulf so much of the move, guys, the bears have run out of momentum, right? It takes them a lot of money to then move the markets that 70% retracement again to the downside and flush. If they wanted to do it, they have to keep it very low. That's not what happened. So we do have a bullish leaning bias looking for the weekly uptrend break. That would be a break of 136. I've said it many times. I'm not playing individual healthcare names, but I do have some leap call contracts on the index as a whole, which I started almost right around here, 133, 130, or sorry, just a little bit lower, around the 132 mark. Moving on to SMH right now, SMH almost making new highs, guys. 281. Let me put a line on the chart. That is your all-time high. With the move on NVIDIA today, it was looking quite attractive, right? So you know who's in control right now. It is obviously the bulls. Beautiful daily uptrend breakout and looking for that all-time highs. In the event we cannot do it in one shot, we have a lot of space right now. Anything on a pullback, anything above 257, looking for a higher low for possible further trend continuation. And even if we fade this, guys, there's so much support below us right now. This whole area, 260 down about 250, is looking fantastic. Gorgeous weekly leg of expansion on SMH. Any pullbacks into support will be a phenomenal buying opportunity, and I'll keep you guys updated. My favorite play, although Micron's a good one, even though we've had tons of names that have rallied so far, such as NVIDIA, such as AVGO, such as Micron, a lot of names have rallied off the lows. There's still some that are left behind. TSM also close to the all-time highs, right? There is one very high quality, very high moat stock that isn't quite performing like the rest, and that is ASML, and I still do really like ASML in around these levels for some possible longs. Moving on to the other one, IWM Russell. Lastly, the Russell coming down on the day, 1.17%, but the Russell still does have a decent amount of space. Daily uptrend is maintained by the bulls right now, looking for a higher low, right? Anything pretty much above 207, both of these levels right there is just looking for a higher low. So let me clean this up so you guys understand what I mean. This is the higher low. We never breached it, as you can see. So at this point, we're just looking for consolidation in the confines of a range. We will see if the bulls have it in them to actually mount above this range, which pretty much ends at 217. As of right now, the chart is not looking too bad, but as I've said many times before, this one really needs rate cuts, a clear rate cut path. And as long as the Fed, especially Jerome Powell, is being very cautious with his rate cuts and people are still penciling them in for September, maybe you won't get the absolute lift that people are hoping for. This sector is still one that's been a little bit left behind, right? Growth. But that doesn't mean that it's not going to be favorable. It just might take a little bit longer than people are expecting. Let's talk about some other sectors, guys, because some of these sectors, in my opinion, are good possible looks for some swing trade longs, and XLP is definitely one of them. A lot of your defensive names have been coming down, right? Back into support right now. My favorite one in the XLP that's been coming down a little bit, guys, is McDonald's. McDonald's now coming down into daily oversold conditions. You very rarely see that on McDonald's, and when you do, you know that you're possibly approaching a local bottom sometime soon, especially when it's into an area of support. It is definitely worth a second look. And I'll remind you what McDonald's is trying to do. They still have the monthly uptrend, looking for a monthly higher low, possibly for some further expansion, coming into the 26 EMA at around 281. And you can gauge from this chart, whenever McDonald's comes down into the 12 EMA on the monthly, this is COVID, by the way, don't mind that. You can go back as long as you want, right? All the way back to 2009. Whenever you get a nice test of the 26 EMA, it doesn't mean that it stops there and reverses instantly. It can cut it by a little bit. However, it's usually a very decent time to possibly explore some long positions. So XLP, there's a few names, but McDonald's is definitely the one that comes out to me front and center. Now, I'll skip over the VIX, the dollar, and the yields today because there was not much movement. The dollar continues to slide. I don't know if anybody cares at this point, right? Moving on to XAU, gold not looking too bad today. Gold was actually up on the day, about 0.27%, reacting pretty much exactly from the support zone that we were labeling on the charts for the past couple of days. So gold kind of looks like this, right? Support range 33.13 down to 32.58 overall. Suffice to say, the bulls have lost pretty much all of the momentum, so they will have to start fresh. The clearest time frame, in my opinion, to elicit some possible swing trade longs is the weekly time frame. This was a very nice accumulation range bull flag at the top of the move. It was very wide, looking good. They're now looking for the breakout, the retest, and possibly run, which is why I enjoy this support range for some longs. It's into the 12 EMA, which doesn't get tested too often by gold, especially it hasn't been in the last 1+ years worth of rally. So that would be the area in which we would be targeting some swing trade longs. They're not bad from here overall, all things considered, but just a little bit deeper could provide a better risk to reward trade. And that's pretty much it for gold. Now, lastly, Bitcoin, before we jump into our big tech names. Bitcoin actually on the day was up, or is up right now, 1.06%. You can see right here, the candle closes in about 13 minutes for this day. And the bulls are looking quite good, guys. Daily downtrend, nice engulfing move right now and reclaiming support, 105,500 down to 101,500. They tested it, they broke it, but they were not able to close right down below there. The weekly candle never closed there. Now, essentially what we're looking for, guys, it's pretty much just a bull flag at the current stage, right? Looking very good for some pullback and some possible expansion. The monthly candle for June is almost closed, and if we close near the top of it, it would be a nice trend continuation candle and could lead us into the possible 112, 115, 120 over the course of the month of July if the market does move into a risk-on environment. I do have one swing trade right now on Bitcoin coming out of this level, looking pretty good, but it's not on what you think. It's on MSTR. MSTR not looking too bad, guys, for a possible expansionary leg. If that is the case, if we're taking longs from here, there's a very clear stop loss area. 360 is the stop loss area. Take profits have to be up here around the 430. Then you'd be targeting expansion of the round numbers, something like a 450. And then, of course, take profit number 2 would be 500, depending on what you're using. Right? Whether shares or options, of course, price everything out accordingly. Now, that's pretty much it for our overall market rundown. Hopefully you enjoyed that. Let's jump into some big tech names, shall we? Okay, so first moving into Apple. Apple actually rallying on the day a little bit, 0.63% to the upside. We know that Apple's been trapped in this big range of consolidation between two levels, overhead resistance 221 to 211 and below support 196 to about 187. You guys know me, I have a swing trade on Apple looking to target the top end of the resistance range, and I do have a bullish leaning bias on Apple, guys. Apple has been diverging from the S&P. You can see that very clearly when I plot the two on the same chart, right? You can see that for the most part, the S&P has been moving a lot higher recently as of the move, and Apple has just been doing a whole lot of nothing. Usually these divergences do not last that long. You can see a similar period of time right here where the S&P rallied, Apple declined, and you might remember, if you're a veteran of the channel, this is when I plopped some call options onto Apple, and the rest is pretty much history. So I do enjoy Apple right now for a swing trade purpose, just because it's lagging so hard behind the SPY. That being said, it's lagging for a reason. The fundamentals are not that fantastic. That being said, it is Apple at the end of the day. It does have a very big weight in the index, and I would expect the index to carry this one up a little bit higher. Or there's another opportunity to constantly play some short put opportunities if that is something that you do enjoy in the mid to low 190 range. Not looking too bad for some opportunities either way. Moving on to AMD right now. AMD up another 3.6%. Today was definitely a day all about semiconductors. AMD approaching its next resistance target, 145 up to about 155. Right? It is it's not the biggest range, but it is these guys back here, these guys down there, a couple little chop zones right there. So, it's not the biggest level for AMD, but it is definitely a psychological level coupled up with the 150. That being said, who's in control? Clearly the daily bulls, right? Very nice expansion move by AMD. I remember, guys, this was called Advanced Money Destroyer. For the longest time, nobody wanted to touch it, and now everybody is asking me, Should I buy it here? You guys know the drill. That's how things usually happen. I mean, I was picking up some shares back here. Not too sure about you guys, but as of right now, the trade is pretty much gone. Buying here is buying into resistance, not the best proposition. But if we do get a downswing here into the support area that we just left out from, 132 down to 119 is going to be that nice backtest range for AMD bulls. On the weekly chart, you can see the exact same pattern forming right there. Beautiful leg of expansion. Any backtest could be a decent opportunity to either write some short puts or possibly just look for some more swing trade longs if the bulls cannot mount and close above this level right there and go for that breakout retest. Eventually, there's going to be a breakout retest of one level, whether it's this one or whether it's the next one. That is what we have to take a look at, but I'm not a big fan of buying the highs into continuation. I'm a big fan of the retest trades overall. That being said, AMD in around the 140 range, just add about 10% to these numbers right here. It's trading right above a 30 price to earnings ratio on a forward basis for the end of the year, and not that much above a 1 peg. Call it about a 1.1 peg. Fairly cheap, all things considered, even at 143 bucks. So don't think you're not buying it at a decent price, guys. Objectively speaking, looking at the fundamentals, it is not that bad of a price. Moving on to Amazon right now. Amazon down 0.37%. This one could be interesting. Resistance range right here, 228 down to 217. Amazon is one of my favorite names in the entire market. If we somehow pull down a little bit more and perpetuate this daily downtrend, that is just looking for weekly consolidation, guys. You should understand who's in control of the higher time frames here. The bulls, right? Looking for a breakout, retest possibly of support. EMAs are all the way down there too, and that support range is 205 down to 196. This has been an area in the last 3 weeks that I've been telling you guys, short puts are definitely an opportunity that I am looking at. But even for some swing trade longs, if you do find some levels down into there, not a bad proposition. Banking on those weekly bulls to really build some momentum and try to attack the resistance range again. Fundamentals on the company, I mean, they're not cheap. They're also not expensive in relation to the growth moving forward. Still one of my favorite picks for the next 2-3 years. Moving on to Google right now. Google up 2.24%, bouncing very nicely out of its resistance or support range, excuse me. 170 down to 160 is that support range. I was also saying that at the beginning of the week and the past couple of weeks, I was looking to play some short puts in this area. It is still a very nice trade into support because the weekly bulls are still well in control of this chart. Backtesting beautifully and might just be looking for that expansionary phase. One thing we have to get first is the daily uptrends back. The bounce is nice, but give me the conversion. Give me the high, the higher low, the higher high. That is when you truly know the weekly higher lows are set. You might just be looking for a couple weeks of expansion into resistance, 184 to 191. This is still one of the cheapest big tech stocks in the entire market right now, trading at a forward valuation of around 18 forward price to earnings and a fairly attractive PEG ratio too. Moving on to Meta right now. Meta down about 0.49% today. I mean, Meta, they're down, but they didn't really cut too much into yesterday's candle. Meta is still looking quite attractive. Nice breakout of the trading range right there, trying to attack the all-time high, which is pretty much 735, 737. We'll see if they can get it. We'll see if we can get it done, or if we have to backtest the area that we just left out of, right? The bulls with a lot of space here above the higher lows, anything above 680, looking for a higher low for continuation, but there's not that much price support, right? When you look at Google, it's a clear area. When you look at Meta, there's really not that much here, which is why it's not my favorite trade for some swing trades. However, guys, I would not be surprised if it does continue grinding a little bit higher. It is, however, one of my favorite stocks for a long-term portfolio. I would not mind adding Meta up here. Of course, it's not as juicy as when I was talking about it down here when I was adding shares myself, but it's not terrible, right? In the high 600, lower 700s, it's not yet a 30 price to earnings. The PEG is a little bit rich, but then again, they are expanding EPS and revenue fairly well. They're expanding net margins very well as well. And I will expect Meta to be one of the biggest winners of the AI trade for the next 2-3 years for long-term portfolio purposes. So keep that in mind. On to Microsoft right now. Microsoft, another green day, pushing new all-time highs. It's going to make its way to $500 very shortly, right? Of course, these moves don't last forever, but Microsoft did stay in a consolidation range, plus the tariff decline, of course, for about a year. And we were saying for a long time on the channel, guys, you might remember me playing the heck out of this support range down there. And when it broke down there, this is when I started adding to my long-term portfolio, right? This was a nice swing trade area, and this is when it became a long-term portfolio buy. That being said, no swing trades for me. Blue sky breakout. It's a little bit too extended on the daily RSI for me right now, and even on the weekly RSI, it's coming into overbought territory. It's funny that it's not more overbought than that right now. I'll remind you though, guys, any significant pullbacks on Microsoft, let's just say there's some rotation down and the bulls take a little bit of a breather, guys. You're looking for a breakout retest, right? And the retest area will be this guy right here, which will be 460 down to about 445. The EMA is sitting right there as well. Not adding this one to my long-term portfolio at these prices, and no swing trades as well. So Microsoft for me right now, it's just a hold. It's not a sell, it's just a hold. I'll never sell my Microsoft. Moving on to Netflix right now. Netflix, bit of a down day after clipping into new all-time highs today. They almost hit $1,300. Maybe, who knows, but I don't know. Maybe we could expect a Netflix stock split on the horizon. Let's see what happens, of course. No formal announcements of that just yet. That being said, the bulls are in absolute full control. This is like Microsoft, guys. No swing trade for me. The bulls are working with a lot of space, anything above 1200, looking for a higher low for possible further continuation. But even if we unwind and go into a downtrend and into some extended consolidation, guys, I just want you to know, right? The bulls have done a tremendous amount of work so far overall. Look at the sheer size of this move. It is absolutely beautiful. I would expect maybe some consolidation if it does happen to come down into here, 1156 down to $1,100, where the moving averages are, where we have a bit more definition in terms of our, there's one level right here, 12, but if not, if it really gets a little bit worse, $1,100. I'm not adding any Netflix up here, guys. I did all my buys in this lower area down there for anything that I wanted to add to my portfolio. Up here, no swing trades from me and also no new longs. Moving on to NVIDIA, brand new all-time high. They finally did it. You remember me talking about this resistance range and how the bulls were just hugging it, right? We were rejecting from it, but we were hugging it very closely, and the bias was bullish because the weekly timeframes were very nice. We just didn't know whether or not the bulls were going to break it right away or back to support first, get more momentum, and then make a second attempt. Well, it was the former. They chose to hug it and then just smash right through. So it does open up another trade condition for us, guys. There were two trade conditions. Backtest of resistance for a long into target, or breakout, retest, and run. So we'll see if we get trade opportunity number 2. Anything at this point above 142, looking for a retest and possibly further long opportunity. A retest is very simple, guys. You can put our stops below here and then target pretty much our round number levels, 160, 170, etc. So looking pretty good for the expansion right there. The weekly timeframes are also looking very good. Look at this, man. This chart looks so weird sometimes, right? Slowing down and then boom, right? You wouldn't have expected that to happen, which is why I was saying, gotta wait for one or two situations. I already had some swing trades on NVIDIA from this level down there, targeting the break and the expansion, but any new trades in the past 2 weeks, I was advising, well, not advising, because none of this is financial advice, right? I was looking for myself more swing trade longs from there again, or the breakout retest offer a little bit more. That being said, NVIDIA is looking absolutely fantastic. Congratulations to all the bulls out there for your new all-time highs. Moving on to Tesla right now. Tesla down 3.79%, back testing the range that they just broke out of. We knew it was very tight. This is the Elon Musk and Trump drama. This is the recovery action from that. Tightening range, breakout into resistance, 360 down to 340, and unfortunately unwinding of the robo-taxi event news. We will see which way Tesla breaks, but as of right now, it's just kind of forming, it's kind of doing an apple, right? Maybe it gets trapped between the range right now, 300 down to 260 to the downside, and to the upside is what we just said, right? 360 to 340. No swing trade longs for Tesla me. No swing trade longs for me on Tesla right away. I'd rather play the bottom end of support, either for some short put purposes under the market or for some possible swing trade longs overall, because you got to consider, right? Swing trade longs from here. I mean, one could argue that you would put a stop loss there, but if you're really looking for the bigger expansion, guys, the stop loss would have to go below the weekly higher lows. And I mean, you're targeting resistance highs as your take profit, right? It's literally equidistant, arguably with worst risk to reward. So that's why I'm not a big fan of swing trades on Tesla right now, but it's up to you guys, right? Not looking terrible, just consolidating right now. Moving on to Palantir. Palantir down a little bit today, 0.23%, but I mean, that's like a fraction of a penny for Palantir, right? In relation to how much they actually can move. Daily expansion is looking quite good right now. Higher low area is set right now at about 136. Any consolidation looking for a higher low for possibly more longs, but in the event we roll this over and go into the daily downtrend formation, you just need to understand the weekly will just be in consolidation mode. It's a gorgeous weekly uptrend with higher lows set right now at 119. You just be looking for a higher low on that, and the support range stays put 125 to 120. I'm not adding any Palantir shares up here, although One could argue that even here, if you buy, you might make some money. It's just not for me. The stock is trading very expensive. I have some shares for from $12. So don't worry about me, guys. I'm up like a 10, 12x right now on my remaining batch of shares. But overall, this one still remains strong. The bulls remain in control of all time frames and any pullbacks. I'll let you guys know when we come into this area right here if there's any swing trades for me. But as of right now, nothing much. Moving on to SOFI. SOFI cracking above the $16 range. The bulls making quick work of this resistance area. It was a big area, guys. 14 to 16. We've been talking about this one for a while, right? They couldn't get into it at first. And then now we've made very quick work of it, right? So it just goes to show sometimes you need to accumulate a little bit of momentum. You come into it very hard, get rejected, accumulate for 4 or 5 weeks, and then you get another batch of fresh longs, which is pushing us into the higher 16 levels of price, looking very good. If we reject from here, I'll remind you, we're just looking for a higher low, right? SOFI is looking very attractive right now. Higher lows are set at the lows of a few days ago. Anything above 1472, looking for a higher low. For trend continuation, this on the weekly time frame, possibly also opening up the door for the pattern that I talked the most about on the channel, the breakout, the retest, and the possible run, right? So any move into the lower end of support right now will probably trigger some short put orders from me. Anything under 14 would be fair game, in my opinion, for some short puts if you're looking to play that. And maybe a further breakout and then retest of the range. Once they've officially claimed the level, maybe I can play it on a back test for some swing trade longs. I'll let you guys know in the event that I do take similar types of positions. In terms of fundamentals, guys, SOFI fundamentals are good. We did the valuation at 15. It's now about, well, let's call it, 7, 8, 9%, a bit higher than that. The valuation when measured by PEG and price to sales is not that bad, all things considered. In terms of SOFI's revenue and EPS growth rates. Now moving on to our two last ones, Uber down about 0.82% today, but they did a hell of a job pushing the levels yesterday, right? So we know the bulls have a very beautiful engulfing move. It's going to probably allow them to maybe make an attempt for a daily uptrend reset. So any consolidation right now looking for a higher low, anything above these guys, 82.23, higher low, maybe for a trend reset and trend change back to the bulls. The weekly time frame held all the keys, guys. This is a beautiful move. Look, the breakout of this big all-time high, previous all-time high area of resistance where most of the price action happened. You can argue that there's this, yes, but most of the price action was had between these two levels for a very long time, acting as resistance. Break out of it, back test it for what, 3-4 weeks in a row, and the swing trade longs, happy to say. One person on the channel yesterday commented that they actually took that swing trade, right? I've been talking about it in my private group, but also publicly on the channel. And I'm very happy to hear that some of you guys are taking these to the bank essentially, and that they're working out for you. So Uber looking very good at around the $90 mark. I mean, it's a little bit higher. It's about 10% higher than when we last did it. So it's about a 1.4 peg, about a 35 forward price to earnings, at about a 4.1 free cash flow yield. Not that bad, but of course not as good as it was when I was telling you guys that I was adding a bit more shares to the long-term portfolios down there, but still not that bad overall, all things considered. And moving on to TSM lastly, TSM very close to its own respective all-time highs, which is, let me just check, 225.09. Very, very, very close right now. And the bulls, of course, absolute full control right now. But a bit of a breakdown here, back test of support, 211 down to 204. And I'll remind you, breakout now, clear breakout. Here we were kind of just hovering above it. This is the clear breakout, right? Any back test could be due for some swing trade longs. If you retest this area right there and you want to make an attempt using the lower time frames, how does it work? I do this once per video on one stock. So pay attention, right? If you do come down, how do you know the daily move higher is finished? Hourly time frame. You'll see a loss of the 12 EMA on the hourly downtrend. How do you know that the downswing, once it started, is finished? Well, you'll see the reverse, right? You'll start to see a new hourly uptrend formation. Entry goes here. Stop at that point would go below your most recent daily low. And then you're targeting the psychological levels, 225, 230, 235, etc. So TSM is looking very, very attractive. I'm not just buying long here and going for it. No, we need some structure, right? That being said, the valuation right now, I guess I should redo it. Right now it's 220. So take 10% higher than here. What is that? A 23, 24 forward price to earnings? Cheap. PEG ratio 1.4, still cheap. Free cash flow yield 2.7. That's not the best. It was very attractive down here when I was buying and when we were buying on the channel, of course. But right now, it's not a terrible bet. I know people are sometimes struggle to buy things at all-time highs because they feel they're not getting a discount. When you're looking for long-term portfolio buys, guys, forget about this. I mean, not all the time, right? But if you're looking at DCA, if you already have TSM shares, don't hesitate, especially with paychecks, of DCAing higher if the valuation is still good. I'm not doing it on Microsoft and Netflix, but TSM, although it's at its all-time highs, is still relatively cheap. So that's how you kind of have to parse through stocks being at their all-time highs. Just because they're at their all-time highs doesn't mean they're expensive, right? Sometimes if they've expanded fundamentals enough since this most recent period, or that they've been the same, I mean, the time that it hit it here was in January. At that point, TSM was relatively cheap as well, right? So now we got a nice expansionary phase, so take that for what you will, right? That's pretty much everything for our stock list rundown. Hopefully you guys enjoyed. Now let's get into some of the biggest gainers and losers of the day. All right, so we're going to run through these quickly now. So if we take a look at our biggest losers of the day, Circle. If you want to know where Circle can possibly come down to, guys, very simple, right? The only level of support that we have is currently at 160. Keep that in mind. Not much support was set on the way up. You'd be looking, if you want to know when this daily move down is finished, simple. We just looked at it on TSM, right? Hourly downtrend this entire time. Sorry, I have extended hours on. We'll take those off. Hourly downtrend, clear drop, right? When you see an hourly uptrend back to the bulls, that's when you know the daily higher lows are set. The bulls do control the daily uptrends. I will be interested in possibly positioning. If we come down into the 180, 160 level, it may be time for me to build a little bit of a swing trade position on Circle as we drop for the potential eventual rally back of this stock. Moving on to SMR, which is down 10.6%. I know I never cover these stocks. I added them for you guys because I know you guys do a lot of these stocks, so I figured I should give my input, right? SMR, I'd be a bit more patient, looking for possibly some weekly consolidation. If we can make our way back into the low 30s to high 20s, I wouldn't mind playing some short puts on this below the market with some very good volatility, or any swing trade longs could be interesting from that location too. PayX actually had their earnings today, a very rare, 9, almost 10% drop for that company. This is one of the most solid companies that you can possibly find. Their fundamentals are bulletproof, very solid net margins overall, and a very consistent and smooth EPS and revenue run rate chart, which is what you want to look for, which is why the chart over time looks something like that. If you get the back test down here, 134 down to 127, I'm a fan, guys. I'm a fan of starting to play this one overall, and I might just be looking for some swing trade longs, a lot of momentum to the downside. So let's just see where it stops. Also some short puts. They only have monthlies, but not too bad. PayX rarely comes into daily oversold conditions, and you can get a sense of when it does happen, it usually translates into a bounce, even if sometimes it can roll over a bit further. When it comes into oversold, this much oversold, it tends to mark some form of a local bottom before a temporary bounce is had. That is when you can find a good opportunity to write some short puts, and you get a bit of a bounce. You can exit the contracts, and then you don't care if it rolls over again, right? Moving on to Oklo, same concept as SMR. Need to find a bit more on the weekly pullback levels here. Target the 12 EMA 46, right? That will be the next area that I might be interested when it usually does pull back to some previous levels. I mean, SMR is a clearer chart in my opinion, but that is the next line of defense for your bull sitting right there. That is if the bears can make their way through this line of defense right there. If we pull back through that range overall, I'll revisit this one, but I will have to see a clear structure change in terms of daily. If this goes to a daily downtrend, I'll want to see the daily uptrend first before possibly positioning, because these are all about momentum. So when you lose the daily downtrend, you need to see the daily uptrend first before you try to make a swing trade long. Sometimes they don't play out immediately. That's why you use a stop loss. But anytime you see a recapture of a daily uptrend, maybe that is synonymous with the next leg higher. We're going to take a look at CoreWeave. CoreWeave is the same context, right? Daily uptrend is very nice right now. Support 160 down to 155, and then 142 down to 136. 2 levels, daily uptrend, clear as day, looking for a higher low. In the event we unwind too much and go for the downtrend, that wouldn't be surprising. Look at this weekly chart, yeah? Straight line vertical, just looking for a weekly higher low. Once again, I'll pay attention to the patterns. If that does happen, we engulf too much, I'll be patient, waiting for the weekly retracement, and then we will review it from there. No swing trades on CoreWeave for me just now. Taking a look at Toast. I really enjoy Toast, guys. If Toast comes back down here into the high 30s, I might be looking to play some mid 30s on the short puts. Fantastic company. Can't spend too much time on it today, but in the event I do some trades in this lower range, I'll let you guys know. After today's decline of 7.1%, you may lose the support range. No swing trade longs for me at the higher levels, but if we drop one level, there just might be. And now finally, ASTS. Same concept as some of the other ones we just saw, yeah? The move is vertical, guys, right? So of course it can keep going, of course it can, but eventually all good things come to an end. Very overbought on the RSI. If you see a significant drop and a daily downtrend formation, understand I'll be looking for a possible weekly higher low. And where could we come into possibly? I'm not saying it's going to go there. I'm just saying if it does go there, that is what would pique my interest in this stock now that it's significantly higher than where it would be for me to look for a swing trade. This is the area that I might be looking to play a pullback, right? So sorry to the ASTS bulls. I'm not saying it's going down there. I'm just saying that if it does get down there, that's where I'm interested to play it, because I'm definitely not going to buy it up here, even though it can work. It's just not best practice. It's not replicable, right? It's not a replicable strategy to just constantly buy things after what, 100%, 130% move. And now finally, NVO. I've been clear about this one after the HIMS drama. NVO is a short put opportunity for me. 60 down to 55 is where I wouldn't mind writing some options to possibly benefit from the best possible price I can get on NVO, as the next line of defense in terms of support is indeed down there. Right now, it's kind of in the middle of nowhere. It's kind of in between resistance and support. So I'd rather wait for a bit more declines. And if it offers it to me, I will take it. But as of right now, no trades for me. I mean, we could talk about RKT for a brief moment. RKT looking very strong, guys. Daily uptrend, just looking for higher lows to persist. And even in the event that we consolidate a bit on the weekly, it's a weekly uptrend, right? Looking for the EMAs. Target these guys right there. 1335 down to about 1275, this range. Beautiful area for a backtest and possibly run. Onto our biggest gainers of the day, SMCI. SMCI is not a bad look for a swing trade, right? It formed a very nice range of consolidation. If I had to take this one long with some renewed momentum today, 39, under 39 would be a stop loss area. And there's some good risk to reward because you're looking for a weekly uptrend breakout of a resistance range. It's a decent trade opportunity, all things considered. It looks good. We're above all the EMAs, right? The bulls have really been accumulating right now, looking good. Stop loss is about $8. It is wide, but the take profit area is up here, guys, 65, $70. You're looking at like $8 of downside for possibly for $20 of upside. Not a bad risk to reward proposition for SMCI. Symbiotic overall, Symbiotic not a bad. It's not bad for short puts. If it pulls back a little bit into the low 30s, I'll be looking to write some short puts 28, 27. I'm just telling you guys which tool I'm going to use to play these overall, right? And then MSTR, we already talked about briefly earlier in the video. This one could see some nice appreciation, but it's heavily reliant on Bitcoin. If Bitcoin completes the uptrending pattern and goes towards its highs, MSTR will follow, so pay attention to that. And of course, we could talk about Coinbase. Coinbase, it's not a long for me from here, but if we do pull back a little bit, guys, into the whole, 315 to 300, maybe for me, for some call debit spreads, I would keep this trade very small just because of the sheer amount that we've ran already. But any backtest of that range could be interesting for me. As of right now, I do just feel that we've missed that trade and I need to wait for more clear price action. And Elf Beauty. I mean, Elf Beauty has been consolidating now for a little bit after their earnings run, coming into resistance again, 140 down to 127. It's not a bad buy fundamentally if you have a longer term time horizon, 3 to 5 years for expansion of the brand. But short-term swing trades into resistance, guys, is not my cup of tea, as you might understand. I was waiting for a backtest down here of the lower 100s. We didn't get it. Maybe we get it sometime in the future. If it does happen, I will let you guys know. And that's pretty much all the ones that I wanted to cover in the after hours today. I'll try to do as many of them as humanly possible without taking too much time. 7, 8, 10 minutes is the most I want to give to this section. But since we cover all the same stocks on a regular basis, I figure if I go through the biggest gainers and losers of the day, we'll get a good rotation of all the possible companies. I have like 200 companies plus on this list, right? We're bound to cover most of them over time, right? Sometimes there'll be value names there, sometimes there'll be growth names, and sometimes I'll pick and choose some names when I go through the individual ETFs on the indexes, right? When I go through XLF, I cover some financials, Visa, MasterCard, Berkshire. When I cover healthcare, sometimes I'll bring up some names there. When I cover XLP, sometimes I'll bring up McDonald's, I'll bring up Pepsi. So you guys know that I talk about so many different names in these videos, just to give you guys some ideas across the board in the event that you missed certain companies here and there. That's everything I had for you guys today. If you enjoyed it, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new. I would love to see you back here. We do these every Monday through Friday after the close. And lastly, but not least, if you have any questions, please feel free to comment down below. I would love to help you out with stocks, options, macro discussions. Anything you guys want is fair game. And in the event that you wanted to be a part of a private trading and investing community, we do both. Not only do we trade the markets every day, but we also build very high quality, high conviction, long-term portfolios and focus on wealth creation in those both aspects. Trading consistently, but also building long-term portfolios to set you guys up the best for your long-term future selves as well. Now, in the event that you did want to join our community, guys, the link is down below in the video description. You get access to all of my trades in real time, whether they are the wheel trades, farming premium from the markets, the directional trades, call options, call debit spreads, leap call options, swing trades with shares. We do a lot of different things in the Discord. Here's just a few of the trades that we've been running in the past 2 months worth of time. Very relatively consistent overall. The wins, for the most part, well, I mean, you can see, right? I don't want to say too much, but for the most part, the wins do outweigh the losses overall. Not a promise of future results, of course, but we've done quite well in the last 9 months that I've had this Discord open, of course. But don't take it from me. There's a whole bunch of reviews that you can take a look at down below in the video description when you are exploring that optionality. Overall, you also get access to our private morning live streams Monday through Friday for about 2 hours, where I trade live and take all your questions on your stocks, your options, and your long-term portfolios. If you're not there, they're recorded, and you can also ask me your questions in our chat rooms all throughout the day. I'm very fast to answer. Also, private videos on technical analysis, fundamental analysis, trading strategies, all hosts of different videos in there that members have been finding tremendous value on. I go a lot deeper into the strategies, the technicals, the fundamentals, everything I look at for trading and investing, a lot more in detail than I do on the YouTube channel, of course. And lastly, but not least, you do get access to all my watch lists and all my charts. You just copy paste, 5 seconds, you get all my watch lists and all my charts. It comes with all the support resistance levels plotted there for you. You have to do nothing other than copy paste them. And it also comes whenever you see fundamental analysis, which I redo every quarter on over, God knows, 150, 200 companies at this point. You get everything you see on the chart just comes copy pasted. So if any of that interests you guys, the link is always down below. And if not, I'll see you back on the channel. That's it for me. Take care. See you tomorrow, and peace.